Hello and welcome to the week ahead, commencing the 2nd of May to the 8th of May. Well, it's a nice big week in terms of the macro front next week with the RBA also meeting. We also have the non-farm payrolls, UK Services PMI, a lot of really healthy macro data to get our teeth into, and we should see some volatility across various FX crosses. Now, the one thing I'll be looking for is the Australian RBA announcement. Certainly some of the data emanating from Australia recently would imply that despite all the attempts to the former, we may actually see some rate cut from the bank there. So as you can see the inflation numbers fell at 1.55% and the market had expected 1.95%. So there is ultimately a chance that we'll see some action there. That ultimately comes under my trade as well. I do sense that we might see a little bit more downside from the Aussie in spite of the fact that we are seeing some weakness across the rest of the dollar crosses over the last number of days. So the trade there is below the 76.90 level. It is a big resistance point, and we would expect to see a drop as long as that resistance holds towards a 75.85 and a max take profit level around 74.50. That will of course be negated if the 76.90 level is surpassed. Moving closer to home then, we have got the Eurozone retail sales. Now it has to be said, a lot of the data from the Eurozone recently has been exceptionally good and certainly not as bad as it once was. And you can even look at the first quarter of this year where the Eurozone is actually faring better than that of the US. So you could say that the monetary policy divergence is not just the only divergence here. So we'll have retail sales coming out this week. It's not the biggest market mover, but certainly if it comes hot on the heels of all this other good data, we could see the euro strike that bit higher. Again, the 114.60 level against the US dollar is the one to watch. So we would look to see a rise of 0.2% month on month for the retail sales. Anything better than that could see euro dollar target the 115 level. In the UK, the biggest part of the economy is the services industry, and that has been okay. It has stayed above the expansion rate, and last time we saw it rising 1 point to 53.7 in March. Now there was an expected drop in activity for future expectations, and that could start to find its way into the number this time round, particularly in relation to the retail sector and of course the political uncertainty arising from the EU referendum, which is due on June 23rd. So do watch for that. When it comes to the pound, as it stands, we are seeing quite a bit of strength in the pound against the US dollar. A lot of that is based on the fact that we've seen some polls that do seem to show that the favour lies with the Remain camp. But of course, this can be subject to volatility. As it stands, I'm looking for the 146.70 level to break to really feel like that the bulls are behind this cable move to the highs. If that fails to actually be breached, then I would expect to see a pullback towards the 145.50, possibly even as low as the 145, 144.90 level. The non-farm payrolls then is the big event of the week, and the consensus is for 200,000 jobs to be added. Now it must be said, overall the labour picture for the US has been reasonably healthy, but there is a strong possibility that we might see a small miss on this number. I myself am not expecting to see the 200k actually reached, and looking at the dollar index, it is now residing below the 94 level. Any drops through 93.30 would be taken as quite a bearish commentary on the dollar. So the non-farm payrolls will ultimately, from my point of view, be the catalyst one way or the other there. But it is mostly about inflation numbers at this point in time when it comes to where the Federal Reserve is really watching. The labour market is pretty secure, so don't expect any major moves in the FX markets as long as that number comes in at or close to consensus.